Welcome to the Global Investor Podcast, a show that focuses on helping foreign investors enter the lucrative U.S. real estate market. Host Charles Carillo combines decades of real estate investing experience with a professional background in international banking to interview experts in all areas of U.S. real estate investing. Now, here's your host, Charles Carillo.
Welcome to another episode of the Global Investors Podcast. I'm your host, Charles Carillo. Today we have Brian Wagers. Brian has acquired a total of 350 plus rental units valued at over $14 million while also working full-time as a logistics manager for a Fortune 500 company. So thank you so much for being on the show, Brian.
Hey, thanks for having me, Charles.
So give us a little bit about your background. You're buying all this real estate. You're working full-time. So let us know kind of how you... what happened prior to getting involved in investing in real estate?
Yeah, absolutely. Thanks for having me first off. And yeah, those numbers are a little bit old. We're at 447 doors now here since the start of the year. But yeah, I got started about 4.5 years ago with a single family purchase. That was my first kind of foray into real estate, altogether. A lot of people, I think it's a lot of people's first step as a single family purchase before they get into multifamily. And that's where I started.
Nice. Okay. And so why did you choose real estate? I mean, you're buying as a single family. Why did you choose real estate as an investment field of something you do on the side while you're working full time?
Yeah. So I had been working full time for, about 3.5 years, and I was really doing well for myself. And I wanted to make my money work for me, and everything led me to either stocks or the stock market or real estate. And I actually dove into the stock market at first, and I lost quite a bit of money on a company called GoPro. I spent, they were doing up and coming, and they decided not to get into, I guess, drones or something, some sort of decision really tanked their stock. And I lost, about $1,000 overnight, and I had no control over it. So I knew stocks really wasn't what I wanted to do. I was spending a lot of time watching it, but really I didn't have any control over that. So everything led me over to real estate, and I was listening to Bigger Pockets and going to a couple of seminars and reading books, and just started looking for houses under $100,000 in my area, and dove in on a little single family rental. The mortgage was $450, and I had it rented out for $950.
Nice.
And everything was going great, but it was just going to be too slow to get really where I wanted. There was no nightmare tenants or anything like that. There was nothing wrong with the property, but to get really where I wanted to grow exponentially, it was going to take too long with a single family. And everything I had read and everyone that I spoke to, people in the arena, they had wished they had got started in multifamily, sooner than they had. And I didn't really want to delay. So I just started looking for multifamily properties just a few months after I had that house rented out. And, I think I had the confidence of being able that I actually did a deal all by myself, when I was talking to brokers and talking to lenders and talking to even potential investors at the time. So I found a 12 unit right after that. And then from there, I guess I got that 12 unit 1 year after I got the single family.
Nice.
And from there, grew to the portfolio we have today.
How'd you acquire? Tell us about that 12 unit. How'd you acquire it?
The 12 unit, it was actually on the market. Yeah, so I just sent up some notifications. It was actually on the market. And I reached out to the broker. I ran the numbers that I had learned how to do. And once I had finally convinced a family friend to invest with me, they were a big proponent of single family, but I showed them the numbers and everything, and worst case scenario, best case scenario for the 12 unit. And when I had finally convinced them, the 12 unit had fallen off the market, but I had stayed in touch with the broker. And about 2 weeks later, it had relisted on the broker's website, but not on the market. And wow. I was there ready to close before anyone else, got to it. The previous offers person finance fell through. So we were there to scoop it up.
And how did you finance that? With conventional, local bank financing?
Yeah, conventional local bank financing. I family friend actually lent me $125,000 loan, and it was actually just a promissory. It was before I really knew a lot about the syndication model and knew about any sort of model. I told him I would give him 10% and I would pay him back, yearly, and he was good with that. He was making like 8% on his houses, and it was a quick return for him. And so he financed the down payment, and then the local bank financed the rest of the purchase.
Awesome. That's a great way of hacking it and getting into it. And did you self-manage that? I imagine you were self-managing your single family.
I self-managed a single family, but I did not. I got into profession. That was one of the reasons why I wanted to get into multifamily, because of that level of, professional property management. It wasn't, the 100-unit ideal for, most property managers, but this property manager had a lot of other units in the area. So, I had units across. It was a local property management company, and they were very familiar with the property in the area, so they were able to get in there. The previous owner actually managed it himself, and we were able to get rents up quite a, do some exterior renovations, interior renovations, new parking lot, and we were able to get rents up pretty quickly there.
Yeah, that's great that you had a local property manager. I'm a big proponent of that because they know the area better than probably you knew the area. I mean, they had properties around it. So obviously, if someone wants to rent in that area, they have a lot more units they can show them. But the other flip side of that is they're in the neighborhood pretty often. There's going to be handymen fixing a toilet across the street. You have your property there. And so it's not like they're 30, 40 minutes away and never see your property unless there's an issue, so.
Exactly.
But that's awesome. That's great. So how did you go from 12 unit? Did you start how did you scale to your next property? What was your next property after that?
So at the time, we were writing letters to owners. My wife and I, actually, she wasn't my wife at the time, she was my girlfriend, then fiance, then wife, but she would drive me around the areas that we were looking at, and I would write down addresses of properties that I could kind of tell were owner operated. Maybe the grass was growing, maybe the exterior needed new paint. Kind of wrote down addresses of more distressed apartment complexes, because that was going to be my strategy. It still is my strategy, going after, value add properties. And we found a 20 unit. Someone got back with us, and he was actually willing to seller finance a down payment. So he seller financed that. I actually have done 2 seller financing deals, 2 20 units. Those were my next 2 deals, were 2 20 units that I used, took advantage of seller financing on those, off market from, driving for dollars on that.
How did you structure those deals? Did you get like 10% down and then you finance the rest out, or?
Yeah. So the first one I did, both of them did 20%. They carried back 20%, and the local banks carried the other 80%. Not all banks will do the seller carry back, but a lot of local banks are more flexible with that. So I just made a list of all the local banks and called them and asked them, gave them an idea of what I was doing and showed them my numbers on how it would work. And I found a couple that were willing to do the seller carryback, and I structured it with the seller. I would just pay them. It was $500 a month. I was going to pay them back, and then I was going to give them 7% interest on their 7% annual interest, not compounding interest, but annual interest. And that I would have a balloon payment in 3 years when I refinance a property. But both properties I refinanced after 1 year. I was able to, implement everything pretty quickly. So I was able to get the sellers out, within a year of owning those.
Yeah. And you probably got debt a lot lower than 7%. So it worked out for everybody.
Exactly. Yeah.
That's awesome. Yeah. The local banks, I've done the same thing, is that I call around, especially when you have smaller properties and when you're dealing with these local banks and credit unions, they have a small investment committee, you know what I mean? And that they might actually, the person you're working with at the bank might drive by that property every day, and they might know the area as well, just like your property manager does really well. And they know that with you show them, your 12 unit and your 1 unit and all this other stuff that you have going on that you've done, it gives you a great track record. And that's where you're going to find it. If you go to a big bank, they don't care, they have a set parameters of what they're working with,
I think it's a testament to multifamily too, when, they get business ideas given them all the time. But when a local bank sees that, a hard asset like a multifamily apartment complex that they know is in the area, and, they're not really as worried about, getting the keys back, per se for something like that. They know that multifamily is a strong asset class, and they're pretty protected just by that apartment building. So I think, seeing how flexible local banks can be with terms on multifamily is a testament to the, risk profile of a multifamily investment.
Yeah, it's definitely something that you'll always get a call back on when you call to a bank. You know what I mean? They're interested in hearing about it. How did you, just one last thing on the sourcing of the funds, when you started building these relationships or looking for these relationships, was it when you had like a deal with an executed letter of intent? Or was it something that was actually under contract? Or you were just like, hey, maybe if I find this, I'll need a bank, and I'm just going to just cold call now and get some people lined up?
Yeah. So for the banks, I got started when I first knew that I was going to get into multifamily. Before I had any deals, I just called all 10 to 12 local banks and gave them an idea of what I was doing, and try to get in touch with the commercial lending department and who the point of contact would be. And like you said, when you say apartment complexes, their ears, kind of perk up. So as far as investors go, that's something I just have done in the past year, get on podcasts like yours and start telling people more about what I've been doing before I have a deal. The first couple of years, it was find a deal, then try to reach out to family and friends and my own pocket, after I had a deal. But now it's a continual letting people know about the benefits of real estate opposed to the stock market or any other sort of investment vehicle, and diversifying there. So when I first got started, it was find a deal, run the numbers, and then, talk to investors. And now it's a kind of continual process, doing both at the same time.
Yeah, you got to keep all the plates spinning when you're finding deals and finding investors, because especially when you're getting into larger deals. So what is your current investment strategy and criteria? You're over 400 units now. What are you looking at? How have you defined your markets, and why do you like those markets? And
yeah, so not quite, driving for dollars anymore now with the smaller stuff, but it was a great start. Now we are looking for, I still look at the 20 to 100 unit properties. But if I'm going to be doing that, it's going to have to be in my backyard, which my backyard inventory is only so big. So, which is Northwest Arkansas. We're headquartered here, which is Walmart's headquartered here, Tyson, JB Hunt, some large players in our area. But I've started to look at Tulsa, Oklahoma. It's a market. It's only about an hour and a half here. I have a property manager that's in place there. Also looking at Oklahoma City, Oklahoma, and Dallas, Texas submarkets. Anywhere in Texas is good. Everyone has their eye on Texas with the influx, especially now. You're in Florida, so you've seen the influx of people come into states like Florida and Texas. A lot of growth there. So I keep an eye out on those markets as well. Now that I have more investors looking to invest with me passively. So as far as criteria goes, value add apartments, anything out of this market, I try to go for 100 units up. Some sort of value add component. Doesn't have to be, it's a heavy value add that I had started with, whether it be property management, implementation, and then try to look for anything 8% cash on cash return. And then anything, try to get close to the 20% average annual return. 15 to 20%, I think, is a good target, but 20% really makes people happy.
Yeah, no, it's definitely a fantastic return. So you were wearing a lot of hats earlier in your career with real estate. I mean, what is your role at your company now? What do you focus on daily? It sounds like you're more on raising money. Are you also working on sourcing deals?
Yeah. So in the beginning, I was doing a lot of finding deals, and then I kind of pivoted more now that I have the experience of finding deals, underwriting deals, and even managing deals. I have started to focus more on raising money um, and partnering up with other people that are finding these larger deals that are more boots on the ground in markets like Texas, Dallas and Houston and Oklahoma City, and those markets that I talked about. I was My goal when I first got into real estate, a lot of people try to retire. My goal is actually to retire my wife. So she is now retired from work, and she works on the business and creating the website, putting out social media information, and taking talking to investors and managing our investor portfolio there. So that was kind of the goal there, to get her more involved with the business.
Nice. Yeah, that's awesome. So it's great that you guys are able to split roles like that.
Yeah.
How did you manage everything now? You're full time. So how do you structure your day, your week, and being able to work full time? And it sounds like a very busy professional sales position while also buying hundreds of multifamily units.
Yeah, so you definitely have. I mean, if you're wanting to do it full time and something else, you have to sacrifice. So me, I definitely sacrifice my social life, which is fine. For me, I don't go out or anything like that anymore. I work in the evenings, and in the mornings I get up at 4 a.m. every day, and I'm working most weekends too. So I try to work after work and weekends and mornings and lunch breaks as well.
Yeah, awesome. I want to just, as we're going through here, I had a couple questions more about the seller financing because as I'm thinking about it,
Yeah.
this is a great way, and it's very. I mean, we have a lot of people come on the show and they're getting traditional financing or conventional, let's say, from banks or from agency debt, Fannie, Freddie Mac, stuff like this. And but let's talk more about like how when you were finding these self storage, because I really want to kind of drill down, or not self storage, when you're finding these properties that are doing seller financing, how did you bring up seller financing? Was it something that how did you build rapport first and then you brought it up? Were you finding out what they needed and then you brought it up? I imagine it was always something in the back of your mind that you wanted to ask them, but
Yeah, it doesn't hurt to ask, because it really can be advantageous to the seller, depending on what their goal is. So my first, question is, why are they selling? If they need to deploy a bunch of capital into something else, or they're just tired of managing properties. So these guys that I was buying from, they were just, it was more the latter. They were tired of managing properties. So I had the conversation with them. I think I can get closer, or even more higher purchase price if you allow that seller financing, with me being able to keep more equity in the deal. You'll be able to defer some. You won't have to report all your capital gains at once. So it's actually tax advantage for the seller to carry back some sort of seller financing, so they don't have to have a huge tax bill on that lump that they would have got. Also, I asked them if they would be interested in keeping some sort of cash flow, while they work on getting putting that capital to use. So all my deals, I had them keep some sort of cash flow coming in just to hold them. And I let them know, if I don't pay, if my payments stop, you're protected and you get the property back. Everything that I've paid you up until that point, you still have your property, but you'll have plus the income that you had gotten from me.
Yeah, that's
so there
very
was
interesting.
really a couple of different, advantages for them.
Did you, when you were structuring out the deal, did you come up with this? Because this is very interesting. Usually, I imagine they didn't owe anything on the property, so it wasn't like a wrap mortgage. It was something, a straight seller financing. That's how you were able to do this. And the bank took the first position, I imagine, and then they took the second position, because I doubt the bank would want to do such a large second position if that's even possible. But did you come up with a strategy? Like, did you structure it like in the LOI when you gave it to them and was like, hey, this is what we can do? I imagine you already had like some sort of verbal communication and confirmation.
Yeah, I would give it to them in the LOI and just put them how the payments would work, what the annual interest looked like, when they would get their money back by, which for me, I told them 3 years, at least, with a balloon payment due at 3 years. But like I said, I did it in 1
Yeah.
year, but in the LOI, I had it in there, what their annual interest rate was going to be, what kind of monthly payments I would give them in the meantime, and then when they would get the full 20% back.
Nice. So when I've done like seller financing, or I brought this up to people before to to sellers, and you outline in the LOI exactly how you want to do it, and you're going through all these different benefits to them. Now, when the benefits I think most people see that aren't involved with real estate is, oh, I can get in for like 0% down or low down payment, which it's true. You can get in for a lower down payment in a hot real estate market like this is probably not as easy to do that, and you might lose great deals because you don't have any money or don't want to put money down. But what other benefits do you find? And I find another one is that you can get rid of a lot of junk fees as another benefit. What other benefits do you find that with working with seller financing versus just going the traditional 75% loan to value, 25% down?
Yeah, and something that you made me think of, I would give them two offers. I would give them a traditional offer and a seller financing offer, so I didn't necessarily lose them. But usually the seller financing offer would be a little bit more attractive to them. I would have a higher purchase price tied to that, if they were able to do that. But, with the seller financing, you're just dealing, the seller is basically the investor. So you're only dealing with one person that you're having to manage as far as distributions go to the seller on that part. And then, you're getting a lot more equity. So it's on all the equity is coming back to you.
Yeah, it's funny how that works, because if you talk to a seller, they have all different types of requirements. Some of them before have told me, 10 for 15% down. Some say, listen, I need 25% down, and they have all their number one goal. And then they have kind of, as you talk to them, it's number one, then it's number two. And then you find out, oh, wow, what I really thought was going to be a big selling point or something I could do, they don't even care about. So it's or it's not really super important. So that's very interesting. I always say, like, when you're dealing with the seller financing, my thinking is that it's really, I would pay another 5% almost on top of a deal for getting seller financing, because you're avoiding a prepayment penalty. You're avoiding all the points and everybody you have to pay off at the bank really to generate the mortgage, which is amazing. You know what I mean? So at the end of the day, and with the easy underwriting, because it's going to be a completely different underwriting procedure from what they're doing to you. Because with them already owning the property, my thinking is that, they already know how this property performs. They're very comfortable with it. I mean, they've probably had it for decades. So it's such a great thing for them to hold it on, compared to if you just brought someone a property and was like, hey, give me money, and this is some property over here that you've never been to, and you can finance it to me. So it's such a great avenue. It's awesome that you were able to structure it like that.
Yeah. Absolutely. There's definitely a bunch of different ways to do it. And I think finding out why they're selling it is a big key to help it go through.
So what are some common mistakes you see with other real estate investors, whether it's new or existing investors in this market cycle or any portion of it?
I think I think new investors, it's typically they start asking questions before they've looked up I think that people try to ask questions before they've done any work, So I would suggest try to find the answer yourself before you start trying to ask someone that's experienced or anything like that. A lot of people ask me how to get started, newer investors. And they haven't necessarily even read a book or listened to a podcast like yours, or listen to all the, as many as they can. Because a lot of those, those questions they can be answered with, doing some research themselves. And when you dive into the research, I think you're going to be able to have some more, you can start thinking of scenarios that maybe get you a deeper question, might bring you more value to ask an experienced person. And I think another thing that I wish, as far as getting started, I wish I would have wore the multiple hats at first. I was super focused on finding deals in the beginning, but I wasn't as focused as telling people what I was doing and raising money. So I think it's good to do everything simultaneously. I was all about finding deals, putting deals together. And now I do everything at the same time.
Yeah, that's awesome. Yeah, so you kind of have an idea of how everything works. It's much easier to bring on team members when you have an idea of how these different parts work. So like if you've ever done, you've you've done some property management yourself before. Now you know what issues you dealt with, even if it was on a smaller property. When a larger property, you understand what kind of issues could happen and how you rectified them, and seeing how your property manager works with them. And it kind of lets you, allows you to be, I think, better at asset management when you've done some of the property management yourself as well.
And I think that made me more comfortable too, starting to ask, before it was just my own money and family money. And now I'm kind of expanding, now I've got more experience and I can say that I've done it. And, it's definitely a level of comfort and confidence and taking other people's money and helping them grow that money, now that I've done, all these deals so far. So it's a good to have that experience. And also, my end goal is to be a passive, I'm actively investing now, so I can be a passive investor too at some point, invest with and someone else's syndication.
Yeah, no, that's an awesome goal to have. So what do you think are the main factors that have contributed to your success?
I think not giving up, sacrificing, it's going to take some, you can't just keep doing what you're doing and expect the same results. So, being tenacious, not giving up when you hear the first broker say no, not giving up when you hear the first lender say no, or first investor say no, keep on trying and keep on going, and try to always be learning. I feel like I'm always learning every day, talking to people like you and talking to other people in this space. I think it's good to continually grow and not try to think that you've already got it figured out.
Yeah, especially in real estate as it changes so fast, where people's tactics and how people are making deals work and returns come changes where we are in the market cycle, and changes every cycle. So how can our listeners learn more about you and your business, Brian?
Yeah, so you can email me directly, Brian, Brian at wagerscapital.com. We have a YouTube channel, and we have a website, wagerscapital.com. So reach out to me on any of those avenues.
Awesome, Brian. Well, I will put all those links in the show notes, and I want to thank you so much for coming on today and sharing all your wisdom with our listeners. I imagine they picked up a number of nuggets that they can now instill into their life, and looking forward to connecting with you in the near future.
All right. Thanks, Charles.
Hi guys, it's Charles from the Global Investors Podcast. I hope you enjoyed the show. If you're interested in getting involved with real estate, but you don't know where to begin, set up a free 30-minute strategy call with me at schedulecharles.com. That's schedulecharles.com. Thank you.
Thank you for listening to the Global Investor Podcast. If you like the show, be sure to subscribe on iTunes or Google Play to get new weekly episodes. For more resources and to receive our newsletter, please visit globalinvestorpodcast.com. And don't forget to join us next week for another episode.
Nothing in this episode should be considered specific, personal, or professional advice. Any investment opportunities mentioned on this podcast are limited to accredited investors. Any investments will only be made with proper disclosure, subscription documentation, and are subject to all applicable laws. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice. Opinions of guests are their own. Information is not guaranteed. All investment strategies have the potential for profit or loss. The host is operating on behalf of Syndication Superstars, LLC exclusively.